Good good afternoon, everybody. What's up? What's up? What's up, everybody? That's the question, isn't it? What's up? What's not up, I guess is really the question. Yeah, not Vol. SE is not up. What's up? All right, let's do the disclosure. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of Recipic. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's a position disclosure. I got out of Snap today into the up move. I got out of Google today. Day traded a couple names to the long side. I added back in UPro today. I got heavier in T triple Q to the point where I'm actually going home net short by a little bit, just a little bit. I am net short by a little bit, assuming that you multiply the position sizing of my shorts by 3 because they're 3x leverage ETFs. I am net short for the first time since July, probably the second time this year. Though July, I actually had more conviction in a down move. Here, I don't have conviction in a down move. It's just an extension hedge, basically, as a pieced out of my longs, and this is what I've been doing for 2 years now, and it's been really consistent. Where every time we start to get $10 plus extended, I piece out of my longs. I begin to piece into some market shorts. At a certain point, if we get extended enough, I can get closer to market neutral or potentially even market short. But the shorts are meant to be a little bit more short term. I'm really just looking for extension to get satisfied. So I had gotten 100%. I was last short here, but I never got net short. Got 100% out of U Pro into the down move on the 9th with the gap down on the 10th. T triple Q, I had gotten almost all out of my short into the same move, but never did get 100% out of this T triple Q short because it never did fully clip this ADMA. So certainly given back a good bit of P&L in T triple Q, but being short now for the last $5 in this ETF, or if you want to look at it from the perspective of the Qs, basically being short the Qs for the last $15 or so. But my sizing it was very appropriate in it. Like I said, into what was initially a gap down pre-market on the 10th, I had gotten almost all out of that T triple Q because we had gotten almost to the ADMA on the daily chart. And then because we weren't super extended, I was piecing in really slowly on the way up initially, but now more aggressively up here. So that's just kind of the update, I guess, on my positions in my portfolio. So let's do an update on the market. And wow, wow, SPY's up 2%, S&P up 2%. In case anybody's living under a rock, the market was up really big today. It's November 14th, CPI day. The Qs are up 2.25%. And here's the wild one. I almost don't even believe that I'm like actually looking at this number correctly. Like, is there a glitch here? IWM up 5.5%. I mean, when's the last time the Russell was up 5.5% in a day? That is a massive move, and we expected outperformance from the IWM today as soon as CPI came out, and we saw the TLT move. Unfortunately, a lot of that, by the time we were even talking about it in the morning meeting, was instantly priced into the market. But 5.5%er for the IWM, which is playing some catch up. And I would argue over the course of the month of November is actually still relatively weak, but got the opportunity to play a little bit of catch up today. Um, so SPYs at this point, gap and some continuation. We discussed in the morning meeting like, hey, we're gapping up to 446, we're $8 extended. You could get early opening momentum for another $2 intraday today. We got that, and we got even more than that. So here at the close, the high of the day today, we just about clipped that 450, 450.06, but we pulled back a dollar or so. So 449 close with the ADMA at 438.22. So we're closing over $10 away from the ADMA here, which is just incredible. And the Qs, here we are at almost 386 with the ADMA at about 374. So $11.50 extended to the upside in the Qs as of the close. Almost at year highs. Almost at year highs. This 385 was big resistance with this lower high back in July when the SPY still made a new high. Year highs in the Qs are basically 388. So we're a hair away from new highs in the year for the Qs, which is just, I mean, absolutely incredible. The IWM, the real big winner of the day today, had that relative weakness in our correction, right? Last time we got to extreme extension, we got $10 extended in the SPYs and the Qs, and $7 extended in the IWM. Was back here on that big day 3 on November 3rd. And then the SPYs and the Qs, they basically went sideways for almost a full week, but the IWM had a pretty gross amount of relative weakness, a concerning amount of relative weakness. While the SPYs and Qs are going sideways, the IWM managed to pull back $9 from that high to low. So overall, even with the IWM playing some decent catch up today, it's still underperforming the Nasdaq on the month. And again, that's despite the IWM being up 5.5% today, with the Qs being up 2.25% today. Um, so outperformance from the IWM by over 3% compared to the Qs or SPYs. Just again, it's an impressive day. Look at the volume on that IWM. I'm just noticing this for the first time actually. The volume candle on this on IWM is massive. And we've confirmed a trend reversal on the small time frame. And we are talking about that with the flat 200 day when we were at lows. The 200 day actually might be slightly declining now at this point, but that when you have that flat 200 day, a lot of times these rallies can still come in and be pretty significant because the big picture time frame is neutral. And that's what we're seeing here now. So the IWM is now switched from a pattern of lower highs and lower lows on the small time frame on the daily chart to a pattern of higher highs and higher lows. Things are looking really good. It's just, are we getting ahead of ourselves? So we ripped today, and the main reason for that, the main reason that's going to be pointed at for that is because the CPI came in light. So CPI basically came in light by 0.1%, like regardless of the statistic that you're looking at. The month over month number, the year over year number, the core month over month, the core year over year, they all came in light by 0.1%. So that's a really good thing. You know, it's a really good thing if you are a patriot, really, for America, or you are a bull on the stock market. You want the economy to stay strong, and you can certainly argue that we're finally seeing some deterioration in the economy with inflation coming down. That's the most Goldilocks scenario. Starting to see a little bit of chatter this afternoon that the CPI cool down is actually more of a result of the economy slowing down, maybe a little bit more than some of these economic numbers are forecasting. So, we'll see how that plays out. But at least for the moment, the market was loving the news today. And when you're already set up, and this is what we were talking about in the morning meeting today, in a flat tape this week, CTAs we're going to be flipping from short to long. So that means, by the way, that the CTAs are still coming into today probably net short this market. But over the course of this week, they should be flipping from short to long with $38 billion to buy in the S&P and a flat tape. And I didn't see the numbers. Usually, I see the numbers from Goldman that don't just show a flat tape, but they show their expectations in an up tape and an expectations in a down tape. And usually, what you see is an even more significant number in an up tape. So, um, what we were discussing in the morning meeting today is I have my trading rules. I'm following my trading rules, and that's what pays me, and that's what gives me consistency in the long run. My trading rules dictate that I don't chase gap ups like this. But we also discussed that there's a lot of people using those CTAs as an example who are caught very wrong-footed in what has been like a crash up almost in this market. Um, Anastasia mentioned it earlier, and I kind of added on to her point on this market rally here. I feel like usually you see it the opposite, right? The market grinds up for several months, and then something bad happens, and the several months worth of price action, of upside price action, deteriorates and disappears in 1 to 2 weeks. It's usually not the opposite, like what we're seeing right now, where it took us 3 months to work our way down to corrective territory for the S&P, nearly bear market territory for the IWM. We weren't anywhere near there for the Qs, but it took us 3 months to work our way down, grind our way down for the Qs to almost get to the 200 day, and then in a matter of a couple of weeks here for us to just stage this insane rally where the Qs again are a hair away from making new highs in the year. And I'll say the spies aren't too far away either. Spies here at 449 close with an absolute high near, just in front of 460. Um, so we're, you know, 10 bucks away from making new highs. $10 away does not feel very far when you consider that we just went up $40 in like 2 weeks, and we've got another month and a half left in this year to see if this S&P can stage a rally to new year highs and potentially close us out on new year highs. I'm not calling for that, but certainly the trend is flipped, and a lot of people are caught wrong-footed, and this market's working its way higher. And this is what I was even talking about at the end of October. Um, you could have a massive rally here and still have the Bears even be right on the big picture. The data is really interesting on the Fed rate cuts. Some of the data that we saw that Fed rate cuts could potentially start as early as March. You guys were commenting, some of you were commenting, and I totally agree. There's no way that that's happening unless there's like a flat out recession that's hitting. I think even if we were to see inflation really work its way down towards 2%, I don't think that the Fed's going to be super aggressive in all of a sudden cutting rates unless we're also seeing major economic deterioration at the same time. So, bears still could be right. We still could be right. We still could be going into a recession here in 2024. We could potentially be seeing the beginning of it starting to show up in some of our economic numbers now, or in the very near future. Um, but you could be right and kind of have a recession come in, and first of all, not even have the market necessarily go down because it's priced in, or the market does go down, but it goes down after the market did this move. And if you're still short from SPY 412 because you think that we're going into a recession, you could be right, but you're probably not going to be around to trade it at that point because your account will have imploded because this move has just been so massive. So risk management is always the key. I'm a big believer in having an opinion, having a thesis, having expectations for the market, but we're going to be right a lot. I happen to be right on this move. I promise you, I will be wrong on other moves in the future. It comes with the territory of the business, but just the flow of money has just become so important, and it was really just those statistics that finally were becoming bullish at the very end of October for the beginning of November, on how money can flow here that is enabling this rally to happen. So again, just an incredible move. And the bull flow I don't think is set to stop yet. I think it might slow down a little bit, as we get through this week, as we get into the end of the month, as we get into December a little bit. Maybe we get our Santa Claus rally. That's going to be the next thing that everyone's talking about as we come into the end of the year. It feels like just yesterday that I was driving to Indianapolis and having my second car break-in of 2022, when we were talking about Santa Claus rallies and January effects, and we're about to be there again. But, bottom line, I don't really have anything else to say about it. CPI came in light. It felt to me like, and I kind of still stand by this. Sure, CPI came in light, but the degree of the percentage up move off that seemed a little overblown. And that's coming from me, and I'm a bull, right? I've been really bullish on this market, and I understand that people are caught wrong-footed, and that can squeeze this market here further. Um, but coming in light by 0.1%, leading to a 5.5% rally in the IWM seems a little bit crazy to me, even as I've been looking for the market to work its way up. But again, all I can do is have my opinion, have my thesis, but follow my trading rules. It's my trading rules and my risk management that actually create the consistency that brings home the paychecks. So, um, that's pretty much where we're at. And right now, as we've gotten as extended as we are, again, this market needs digestion. We could get more extended tomorrow. We could work our way up another couple dollars and get to 452 tomorrow if we want to. But most likely, what needs to happen after this move is something similar to the last time we got over $10 worth of extended, which, by the way, was just over a week ago. And we needed to, depending on which index you're looking at, time/price correct for like a full 4 or 5 trading sessions before the market was able to break out of the bull flag and kind of give its next leg up that we're looking at right now. So for me, the next question isn't really about like what am I buying tomorrow? It's about how am I managing myself through an inevitable price or time correction that maybe doesn't start until we go up another $5 in the spies, but because momentum is a heck of a thing, especially when people are caught off on the wrong sides. But this move is so big so fast that I can't justify any new big picture buying until the market is able to reset up. And that's what it did for us, by the way, at the end of last week. You had to be very patient. But after 4 or 5 days of time and price correction, it was finally on Friday morning just last week that we said, okay, we've been patient here for 4 or 5 trading sessions. Now we can finally look to the long side. And if this market wants to have real momentum, we could start going again today. Lo and behold, that's exactly what happened. I know Friday they made the entry difficult because you kind of needed to be in pre-market when we went from red to green, which is difficult to do. It's especially difficult to do a size. And by the time we opened up decently high. Um, but that was the reset up. So when the market's extended like this, most likely my meeting tomorrow morning, I can already tell you what it's going to look like. Obviously, we'll assess the PPI, we'll assess the gap, we'll see how we're gapping. But if the PPI could push us above um, today's high tomorrow, I actually will really like that as a potential short setup because of how extended we'll be. If PPI causes us to gap down, then we'll be in no man's land, and I'll be given that meeting that I've been giving a little bit too often recently about how we're in a difficult spot for new longs, but a difficult spot to really come in on the short side of the market with any conviction either. So yeah, I mean that's where we're at. Again, just big upside move here for the market. I thought that today was very difficult for new longs. I don't like to come in and chase price with these types of gaps. The extension on the 5-minute chart wasn't even fully fulfilled until 10:30 because the offsides players caused a squeeze right away for $2 right off the open, which again we said could happen in the meeting. And that's something you could take advantage of if you're a pure momentum trader. I know a few of you guys here on the team are. I'm just not. I day trade, but I start from a little bit of a bigger picture thought process, and that is what works for me. So yeah, I mean, just incredible day if you happen to have long positions coming into today's trading session. Otherwise, it was really difficult. You had to be very patient on the short side. I'm trying to see where I first started my U Pro short. Started it at about 10 a.m. So it wasn't until we were in this move that I started to short spies very small. And I think if you're doing that, the two ways to do it are one, wait for a signal and get size with stop loss versus highs, or two is to be a little bit lighter, recognize the daily chart extension, recognize that you're playing more of that daily chart extension, and be willing to, kind of build in a little bit on the way up. So, for myself at the end of the day today, I'm positive in U Pro. I made a little bit even in TZA also as a counter trend IWM trade. But I made a little bit of money in U Pro just by, being sized appropriately and building into and building out of the position. The T triple Q I'm down, pretty nicely in today, but that's because I had some T triple Q short coming into the CPI still this morning, so I'm nicely down in that one. But you know, just you can I guess just see with the executions here, you can see I'm starting to short a little bit. I'm adding, I'm covering some, I'm building back in on the way up, recognizing that we're $11 extended. You know, covering some on the way down, reshorting on the way up, covering on the way down, reshorting on the way up, covering on the way down, and kind of just massaging the position based on the extension that we have on the daily chart and putting a couple dollars in my pocket in the process, and also helping to keep my long positions a little bit covered into such large and impressive extension from the market. It's pretty much all I got. Traded JOBY today. Had bought a pre-market. I got stopped out when opening lows broke pretty much. I traded COTY today. This one I only got partialed on, and I got partialed on at pre-market, so I didn't have a ton of stock in it, unfortunately. Still got paid decent because it was a big move, but I was out of that position by, $10.75 or so. And I didn't do anything new outside of that, just position management, which position management, when we're moving like this, is a lot of volume, so I still traded a lot. Um, but a lot of volume. So that's all I got. I am happy to answer any questions that you guys have and look at any charts that you guys want me to look at. So, did they change up healthcare to make it cooler? I'm not sure if you're talking about the CPI number, but I'm not sure. Dimitri giving us some information though on health insurance here. BLS is using new math on health insurance, was down 34% year over year. Wait, so that shaved 18 basis points off the CPI headline. So really it should have come in 0.1% hot, but they changed the accounting metrics on the healthcare sector of the CPI number. Is that what you guys are telling me right now? That's interesting. Wow, that's really really interesting. Uh you can always just change the rules, right? You always just change the rules of the game you play if you don't like how the results are coming out. Yeah, so I don't know. I already felt that this move, and again, this is coming from someone who's a bull. I already thought that this move was a little overdone with the degree of the up move intraday today, given the fact that we missed by 0.1%, and now you're telling me that the numbers are adjusted here a little bit is very interesting. But yeah, what you're saying, Dimitri, is also true. Markets work in feedback cycles. So the algos or whoever shot us up that forced CTAs and other quants to buy maybe heavier than they would have otherwise and helped create a really massive underlying bid in the market. So really, really interesting information there. Thank you, Eddie and Dimitri. From Shane, how many trades are reasonable for today if you're actively watching charts? So I don't have a great answer for that because I think that answer is a very much an individual answer. It depends on what your strategies are and how you trade. It depends on what your edge is in the market. It depends. Are you Judy's a very active momentum trader. She's gonna have a lot more trades every single day than someone who is maybe a swing trader or something like that. So, how much is reasonable for today? I think depends on your approach. I also think, and I was talking about this in an afternoon meeting either yesterday or the day before yesterday. Um, Certain days you should be more active because there's a lot of opportunity, and certain days you should be, much less active because there's less opportunity. For me, today was actually a day where I would think that there's less opportunity because it was all taken away by how big the gap was. So for me, on a day like today, I was actually very, very active, but that's because I had swings on that I had to manage based on my game plan into this move, and there was a lot of movements. But as far as new trades for me, I didn't do a tremendous amount of new trades today. Um, Though, I mean, again, it's such a hard question to answer because now I'm seeing Judy mention 75 buys and sells. I did significantly more than that, but I would argue that I only took like 3 or 4 actual trades today, and everything else was position management, which that's a lot of buying and selling for me on days where the move is so big. Um, Hope that helps. From Dave S. I know you use Uvixi, which gets its price from the VIX. The VIX is priced from SPX put prices. Is there an equivalent ETF like Uvixi, which is based on Nasdaq puts instead of S&P puts? Someone's asked me that question before. Um, not that I've seen is the answer. Maybe there is like a Nasdaq VIX basically, but if there is, oh, there we go. VXN Bill K is letting us know. Wow, gotcha. So that is the VIX Nasdaq, I guess, VXN. I don't know if there's an ETF off that. Yeah, I don't know if there's an ETF off that. But you could look at VXN. Yeah, that's because that's like because you're trying to type up the VIX itself. Yeah, for an ETF, I don't know. No, you can pay for that market data if you want to through T3. I just don't. That's my thought process is I don't want to pay for it. If I want to know the price of the VIX, I can go to Yahoo Finance and see the actual price of the physical VIX. And otherwise, the ETFs themselves are generally enough for me from a charting perspective. So I don't have SPX anymore. I don't have the actual VIX anymore or the cash indices. I used to pay for that data, but market data just keeps going up and up and up and up and up in price. So I dropped that a couple years ago now. I mean, if you're buying directly into the CPI number today, you're kind of gambling. There's no way to know what that number is going to look like. There's no way to know how the market's going to react to it either. So I don't like the idea of just buying right into an event or selling right into an event. If you already have positions on, those positions should have a game plan that you've established for yourself ahead of time for the trade, and then you should be following that game plan, which is what I'm doing. Would just taking one good trade be all right? I'm gonna say no to that. I think in general you want to be in front of your screens. Midday to step away for a little bit if things are slow is fine. But I don't. This is one area where I definitely really agree with Scott Ruther when he talks about being like a blue collar worker with the stock market, and that I've never been a believer that you could just show up when the market's opening, place 2 trades, close your day out 15 minutes later, and go have another life and be a very very successful trader. I think it requires a lot more work and preparation than that. Cool. Let's see if there's anything on the YouTube. From Gabriel, would love the Qs and spies to go sideways and watch the IWM catch up with small caps and growth stocks. I would love that too. Or I would love to see. We got a great day of relative strength from the IWM today. I would love to see that continue. At the end of the day today, the IWM closed at almost 179 with the ADMA at 171 quarter. So we are like $8, $7.50 extended from the IWM. And again, usually with the Russell, with the IWM ETF, it's $7 of extension that I consider to be extreme. So it looks like every index needs to correct, but markets can correct in different ways, right? Like what we just saw when we were that extended on November 3rd. We saw the spies and Qs go sideways and correct through time, basically, while the IWM corrected through price. I would love this next market correction that we're due to have at some point soon. Um, I would love for this market correction to basically be the opposite, with the spies and Q, particularly the Qs acting a little bit weak on the correction, and the IWM acting better and acting stronger. I would love to see that, but you know, I've been talking about how I want the IWM to outperform the Qs for months, and it never really seems to happen. So, uh, we'll see how it comes together this time around. So I appreciate the comment there, Gabriel, in the YouTube. Anyone else have anything for today? I feel like sometimes these days are so big and so massive, and it's just obvious that there's not really as much to talk about during the actual afternoon meeting. Pat here saying SPX option volume sets new all-time record near 4.4 million contracts, over 2.07 million calls and 2.33 million puts were traded in the SPX option pit today, as the underlying index climbed $84 or 1.9% to close at 44.95 spot 70 following the latest CPI release. This volume 27% above average and breaks the prior record of 4.28 million set October 6th. 1.58 million contracts, or 35.8% of the flow. This is actually interesting. 35.8% of the flow were 0 DTE options expiring today. Whew. Wow. Okay. Nothing else new in the YouTube, so I'll wrap it up. Have a great night, everybody. I will see you all tomorrow morning, or we'll see how we gap. We'll see how the PPI pushes us, and we'll figure out how we want to position ourselves for the day. So have a wonderful night, everybody. I will see you all then.